There's a couple different ways of trading. One of them is where we're trading in and out every single day, right? That's day trading. We're trying to make an income. That's like a job. And then we have trading where we do for a hold for maybe a few weeks, few months. But again, we're not really holding for the long haul. So when it comes to trading, technical analysis, which is reading charts, price action, the momentum of what the buyers and sellers are doing, right? And then we make decisions based on that. So trading is very nimble. It's more active than investing. So when it comes to investing is when I think fundamentals really come into play. Whereas it comes to trading, you have to ride the price action, the momentum.
Hey guys, welcome back to another episode of More Clients, Less Effort. Today, I'm delighted to interview Anmol Singh. Anmol is the best-selling author of Prepping for Success, 10 Keys to Making It in Life, and a highly accomplished stock market trader and investor. He's coached over 10,000 traders, investors, and hedge fund managers, specializing in both technical and psychological aspects of trading. Anmol is also the founder of the Evolve Mastermind, a top success community for ambitious professionals. We're features in Forbes, Business Insider, and the International Business Times. Anmol is an angel investor, advisor, and entrepreneur with a successful real estate portfolio and Airbnb business. His work continues to inspire and guide individuals striving for breakthroughs in finance and beyond. Anmol, welcome to the show.
Thanks for having me. Looking forward to chatting with you.
Mate, I'm going to kick it off because in the background here, not that our listeners can see it, but certainly our YouTube followers can. We've got a set of golf clubs that seems to have turned into a hat rack. So what's your handicap?
My handicap, it's not even a handicap on the floor yet. I picked up golf about a year ago. So I'm still like in the weeds of developing my swing.
It's just I picked up golf as a young fella. My parents got me golf lessons thinking I might be, I wouldn't say Tiger Woods because that would have been before Tiger Woods. Maybe Greg Norman or someone like that, you know. Mm-hmm. And to this day, I still say that my handicap is actually my golf swing.
I hear you. It's a tough gig, you know. It's a tough gig because like if you leave it for a little bit and you come back to it, all that practice is like gone out of the window unless you build that muscle memory and keep it going. So yeah, I mean, I just have it because it looks good, but I haven't really done much with it over the last couple.
I'm gonna replace my pot plant with a new.
There you go. Yeah. Get a custom one with your name on it. Looks great.
Love that. Okay, speaking of great, golf is definitely a game of inches and something that if you don't continue to practice, you lose very, very quickly. It would seem. Is parallels between that and trading? I mean, we just had Easter and you mentioned that the markets are closed over Easter, so you got to have a little bit of time off for a change. So you're trading every single day?
Correct, yes.
Tell me about that. Draw me some parallels between golf and trading and what's the difference? I mean, is trading a game of interest?
Yeah, definitely. I think golf, just like trading, is kind of like the greatest meritocracy, right? Because it's not really a team sport. So if you're playing golf, it's not like somebody else can influence if you're going to win or lose. It's you. The ball is just sitting there, right? It's just your ability to hit it and strike it. And it's not moving. There's no other variables. There's wind and all the other variables, but like there's no other variable as opposed to like somebody else influencing your results. Like in a job, your colleagues, your other business colleagues, your manager, your supervisor, company's policies, so many things can influence your results. So even if you might be the best person at your job, it can still be affected by what the company does as a whole. In trading, it's like you and the computer, right? You're sitting on your computer. There's nobody external influences really influencing your results. It's your ability to stick to and follow your system. I think golf is the same way. It's like your ability to hit it. The ball is just sitting there. It's all on you, right? You can make up all the excuses you want, but in the end, it's how you strike the ball. I think it's the same parallels, whether trading, business, or golf, they're all kind of the same thing.
Is it the same, I guess, discipline in training as it is in golf?
Yeah, absolutely. Because you got to have that, pre-shot routine, right? So in golf, at least one of the things the few lessons that I took from, some of the coaches, they would tell me the same thing. Like, even though, you got the golf swing down, but I want you to do it the same way every time. Meaning like, okay, you watch the ball, you kind of put your aim down the line, you walk towards it, you stand, you look over, you aim, and then you strike the ball. So it's like a pre-shot routine. And you'll notice every golfer, has a successful pre-shot routine. They'll do the same thing over and over. Maybe they turn a certain way, they grip the club a certain way. And in trading, it's the same thing when we come into the markets. Like, what's our pre-market routine? We call it before the market's open. What's your plan? What are the top stocks you're looking at? What's your plan with those? How much are you planning on risking today? Like all of those things we do, and we try to do the same way every day. So that way, when we come in, it's not like a new thing we're picking up. We're kind of going by our system, our pre-shot routine, our pre-trade checklist. So I think it's very similar in the way we approach the markets and trading.
We mentioned in your intro those psychological elements. Is that what we're talking about when we say, what you're going to do, how much you're going to risk, where you're going to put your stop loss, those kinds of things?
Yeah, absolutely. Because, in trading, if you decide after you get into the trade what your plan really is, you've already lost half the battle, right? And it can also fall into the same psychological pitfalls where let's say you're on a winning streak, right? You're crushing it, or all the trades are just winning, winning, winning. It's very complacent on the next one. Then you can be really complacent and forget your routine because you're like, oh, everything's just working. I'm just going to take this trade, and then you lose on it. And then you're like, why did that happen? And golf's the same way. Like if you keep following the routine, you'll probably hit good shots and you'll get better. But if you start navigating or negotiating with your routine where the next shot you're like, oh no, I just got this, and you just go and try to hit it and don't follow the same routine that you did, then you can fall into the same traps of being complacent, and then you hit a bad ball, you don't strike it, there's not a good impact on the club. I think all of those same things happen with trading too, is like, can you follow the process consistently over and over and over again? Or are you going to negotiate it, right? Are you going to be like, oh, I just got this. Don't need the pre-shot routine, just smack it. And traders do that all the time. Like newer traders, especially, they come into the market, they maybe follow their process correctly. They get a good streak of winning trades, and then they get overconfident. And rather than risking like a small percentage of their account on every trade, they suddenly get overconfident and start risking bigger amounts, and then they take a loss. So I think it's just, you got to be rigid with your rules. You got to be flexible with your emotional state and how you approach it, but the rules need to be rigidly followed.
So that's where I'm going wrong. Like in golf, I consider myself a value for money player.
Okay.
I'm going to get a lot more shots for my green fees than most other people. But the same thing can't be said for trading. I actually thought was an interesting parallel to explore in what's that system that we sort of go into a trade, just like into a golf swing. Tell me how you got started in trading.
Yeah, for me, it all started like in college. I was in my dorm room, went to college and university in London. And then there we had like a sort of like a gap year where you had to do 1 year's of work experience before you can finish your university and graduate with a degree. And that was my year. I was like, all right, and I got this. Trading was not even in my radar at that point. I was like, all right, I'm going to just get like an internship, like a marketing job, and it's going to be great. Growing up in like a business family, I saw the ups and downs of running a business. And, one day we're doing well, one day we're not doing well. So I was like, okay, I just want to get a job. And applied everywhere, and literally like wasn't able to get an interview, wasn't able to get into the next few stages. There's a couple jobs like BMW and stuff. I got into the final stages of the interview. They did all of this stuff, but I still didn't get the job. And then I was like, okay, maybe I should lower my goals. I should, rather than applying for bigger companies like Goldman Sachs, JP Morgan, BMW, I'll apply for like startup companies. And I didn't get a call back either. That's when I was like, wow, I just got a whole year, and all my friends are getting these successful internships and jobs, and I'm not getting anything. I got to figure something out. So I had a whole year of just being in my dorm room, and I was like, okay, what can I do online, I guess? Because being an introvert, my thing was, okay, if I can find something to do on the computer, that'll be the best thing ever. And I have a whole year to figure it out. And that was a year when I started like reading a lot about the stock market, reading all the books I could get my hands on, and, just became really, really curious about it. And that made me just want to research more. And I became like a kind of like a nerd geek about it. Just wanted to learn every little detail about that trading and how those markets work, why the stocks go up and down, who decides that. And that's how I, really got into figuring it all out. And I used to write a blog back in the day, just, posting my thoughts on my research and all of that stuff. And then eventually I became freelancer for like Yahoo Finance, Motley Fool, writing articles for them. And that's why I tell people, never trust anything you read online. They probably outsourced it to a college student like me back in the day. And,
turns out that college student's advice might have actually been correct.
True, yeah, true. But at that time, like I hadn't proven myself, right? It was just like a research, like an Anmol.
Were you actually experimenting? I mean, I'm reluctant to say experimenting with trades whilst you're doing your research to actually put this theoretical knowledge into practice and see what, like, if I put $100 down or 200 or 500, 10,000 down, part of this sort of learning to see whether the theory applied in practice.
Not even. I think for me it was like I had the curiosity. I was just like I would research everything about a company and I would try to figure out, put out my findings on okay, what I found. But the way I trade now is very different to the articles that I used to write because my articles were based on fundamental research, like the company as a whole, their products, their CEO, the management, like their balance sheets and all of that. And the way I trade now is all through charts and technical analysis. So it's very different than what I was doing. But for me, it was more just like as a way of honing my research and just putting it out on there. And then apparently the research was very well conducted. So then that's where I used to get paid, $1,000 or $1,500 per article back in college as a college student. I mean, that was a pretty good thing because for me, yeah, because I would think, okay, they're gonna pay me 1,000 to 1,500 an article. I'm gonna write 10 in a month, you know. So that's how I collected the money to actually do my own investing and trading is by writing these articles. So it's a very interesting start how I got there. And I think, yeah, I think it's just if you're curious about it, you learn about it. There's a lot of good place for researchers as well. I guess not anymore. Now people can just write AI and have these articles written. But back in the day, there was no AI. You had to manually sit and write all these articles.
Let's talk trading. And you mentioned there's all that sort of deep technical research about a company and the management team and all that sort of stuff that might sort of indicate to the fundamental value of a company and its potentially future success, because that's all we're really trading on, aren't we? We're saying it's here. I believe it's undervalued for these factors. It will go up because of these other reasons. Is the technical analysis that you're doing now, charts, graphs, etc., is that based on the same fundamental value, or is the market more whimsical, I guess, than that? I mean, if we're talking, I guess, the big factors that influence value, it's not mum and dad investors, really, is it? It's big institutional investors that kind of shift the market one way or other. What's your thoughts on that?
Yeah, so fundamental analysis is actually useless when it comes to like trading. It's good for like long-term investing, right? Because if you're researching a company on what the company's products are going to do, what the company is like, all those things take like time to play out, right? So, and you might be right on the research, but it might take 3 years, 4 years, 5 years for your thesis to come to fruition. So you can't really trade on that, right? Because what the stock's going to do the next 5 minutes as a trade, like the fundamental.
No, we're talking trading. We're talking day trading as opposed to trading, investing.
Right.
Buffett
Yeah. So
style,
investing was
10 to 20 years.
right. For your listeners, investing would be where you buy a stock and you hold it for, let's say, 5, 10 years. You're not planning on really selling it. You believe in the company and the product and the services. And then trading, there's a couple different ways of trading. One of them is where we're trading in and out every single day, right? That's day trading. We're trying to make an income. That's like a job. And then we have trading where we do for a hold for maybe a few weeks, few months. But again, we're not really holding for the long haul. So when it comes to trading, technical analysis, which is reading charts, price action, the momentum of what the buyers and sellers are doing, right? If hedge funds are buying a lot of shares of a company, you'll see that on the chart. Price is going to start to go up. And then we make decisions based on that. So we're riding the momentum. So the stock is, clearly going down. We're not really going to buy it. We actually might bet against it and short it and look to make the money as the stock goes down. So trading is very nimble. It's more active than investing. So when it comes to investing is when I think fundamentals really come into play. Whereas it comes to trading, you have to ride the price action, the momentum. Because you might have a great company, but if the stock's going down, it doesn't matter how great the company is, right? You got to be able to get out if you're in a long position on that, or you'd be willing to bet against it and short it.
Yeah. So we're not actually looking at the intrinsic value of the company. We're just trying to read what the market's doing in terms of, day to day sort of activity and where the money sort of might be flowing.
Correct. Yeah. Because I mean, you like me probably know so many great companies, but the stock still keeps going down. And then there are bad companies like GameStop and AMC that lose more money every year, but the stock goes up. So clearly, like fundamentals is not what drives the market. What drives the market is emotions of fear, greed, and people's ability to want to bet on it. Hype. A lot of the reasons why momentum of a stock increases or decreases is based on what people are talking about it online. So I think that take all these great companies, Citigroup, you can take back in the day Enron, Bear Stearns, they're all fundamentally great companies until they weren't. But if you were following charts, they already had broken a lot of their technicals pattern that would have actually allowed even investors to say, okay, let me, something's going on. Let me get out of the trade. And I think that's why trading helps because we know when to get out. Whereas an investment, you don't really have an exit point. Like you don't really know when to get out when you're right. The stock is going up in your favor.
It also might be some kind of external factor that says, I need to buy my first house, so take my stocks and put it in quick order.
Yeah, exactly. I mean, apart from those reasons, most people don't know like when to exit the trade or investment. So I think that's where technicals come into play because they give you those points on when to take your profits and when to take your losses.
How do you respond to people who say that trading is a bit like gambling?
Yeah, I mean, I usually pay zero attention to them because, again, if somebody's in the business, then their opinion matters more than somebody's not in the business, right? Because people would say the same thing about business owners too. Oh, 75% of the business go bust in year number one, 90% don't make it after year five. So does that mean we should not start a business? I mean, that's a wrong thing to think about it.
Yeah.
And then, yeah, same like sports. Oh, don't play the NBA. Only 11 people are going to make it in the team. But no, it's like anything else. Anything at high performance level, there's going to have a failure rate, but that shouldn't deter you. And also, there's research that a lot of people quote of 90% traders don't make any money. That research was conducted by brokers, right? And the brokers took all of their customer accounts and then just came to the number that, okay, 90%, let's say, lose money. But, my mom has a brokerage account. So in the statistics, she'll also be counted as a trader as long as she bought or sold something even once, right? So professional traders are doing this for a living. They have a system, they have a plan, they have ratios, the criteria. They've done back tests on their trades, and they have good enough data to know, okay, how much percentage I'm going to win or lose, or how much my win loss ratio is going to be. Whereas anybody who buys or sells a stock, the broker would count that in their statistic as a trader. And we all know just buying or selling something does not make you a trader. It's just somebody who has a brokerage account.
It makes you bet to lose money, probably.
Yeah, well, most people, yeah.
Yeah. Now you've diversified your wealth portfolio into brick and mortar assets as well. What was your thinking behind that? And we'll put a great big disclaimer on that this is not financial advice. This is just your approach. Why did you decide to do that?
Yeah, because for a couple of reasons. I think number one reason was like I wanted to build an asset, base of assets as well as secondary income that doesn't rely on me trading every day, right? Because if something happens to me, let's say, God forbid, something happens and I can't do what I do anymore, then well, right now my business would be eat what you kill. Whatever I trade, I make. So if I can't trade anymore, then I'm sort of in a trouble because even my education business, coaching business is reliant on me actually trading. So then a lot of things it was like all of my wealth was concentrated in that one bucket of trading. So that's why I was like, okay, I need to diversify so that if something happens or whatever, at least I have assets and income working for me without requiring me to be actually physically be there. So that was number one reason. Number two
You've got
reason.
to be on, right? It's the same.
Yeah.
You've got to practice every single day, or you
Yeah.
start to lose the skill.
Yeah, and I think trading for me was always like a vehicle to generate the income, right? It was never meant like an end goal for me, although it has sort of been because I love what I do. But it was always a way for me to, okay, I want to trade and I take a percentage of whatever I make from my trading and then I just start parking it, right? Whether I buy physical gold, whether I buy real estate, or whether I do something else or startup companies. But it would always be my original goal always was like, okay, I'm going to trade, I'm going to make money, but then I got to take that money and park it somewhere. So now I'm building assets outside of requiring my time.
Yeah. I want to pivot the conversation a little bit because I know that you've approached a lot of the things that you do in your life with that system. You're trading, you're buying, real estate assets, even your coaching. But I want to look at particularly angel investing. All right. And I want to encourage our listeners as we sort of get into this to think about what would an angel investor like yourself look at if you were looking at, my company, the listener. So talk me through how you look at valuing or I guess the opportunity, right? Because angel investing to an extent is trading as well. And it's probably got a slightly longer horizon. But how do you look at a company and go, that is something that I'd want to invest in? And how do you decide how long you're going to invest in that? Right? Because I think it's important for us to, as business owners, to look at this as the receiving end and go, well, where's the intrinsic value? If I was to try and attract angel investment from someone like yourself or anyone else that we might come across, what do I need to be doing to make my company fundamentally look like it has value?
Yeah, so there's two like types of investments when it comes to startup companies and angel investments. So one is where you're not really looking to make any cash flow. It's a business that you think is going to be like, let's say, the next big thing, or it's going to be something big that you're as an investor might cash out would be when you IPO, when you go public, or you get acquired. So that's one type of investment, right? And then the other type of investment is like it's a nice business, it's a cash flow producing business, it's going to generate profits, but it's not going to be like an Uber or something, right? But it's still going to be a good business. So then in the first outcome, I'm looking for an exit. bought out, IPO, something. On the second scenario, where it's a smaller business that doesn't have that, outcome, but then I would be looking for either royalties, dividends, or a percentage of sales, a percentage of profits to incentivize, my investment. So that would be the two things. But then the second thing is, okay, what's differentiating that business from any other business, right? So for example, let's say if it's a, marketing agency, then the same question would come. Okay, what's different about this marketing agency as opposed to the other marketing
It's
agency?
unlikely we got to see a marketing agency at an IPO. So that's
Right. So it'd be more like, okay, in terms of differentiator, then what's differentiating it from the competition? Maybe you have some unique idea, maybe using AI a unique way that other people are not using AI in a unique way. So like the differentiating factor, and then what's the total addressable market for that business, right? And then where do you line up as it relates to your competition? So I can kind of see, okay, the top 100 people in your industry are doing this, your competitors, and you're about there. So I can see, okay, there's room for growth, right? So that's number one thing I look for. And then the biggest thing, honestly, is the entrepreneur. Like a lot of the investments that I've made is just based on the entrepreneur and how I feel about them, right? Either is it through their prior track record, maybe they've had exits in the past, maybe they've had profitable business in the past, or B, like what is their intention of being in the business, right? Like if the intention should be that they love the business, it's got to be something to do with the industry. It cannot be just about like you getting an exit. Because I had a meeting, this was 3 years ago, met this entrepreneur who's running a social media management. It had an app, sort of like, the other apps that let you post everywhere, but it had some additional tools to it. And I liked the product. I was like, okay, I'm probably going to invest in it. And I came full intention on that meeting to write the check and do the investment. And then I started talking to him, and then I'm asking him a few questions. And then it's all of it about was like, here's the money that we're going to make. And then this day we're going to, either get acquired by this company and we're going to sell it. All of his talk was all about like, I'm going to sell this company. It was never about, okay, here's how I'm going to grow the company. So then that was a red flag for me, because then I'm like, you're not in it. You're in it to sell the company. Then if you're going to look to sell the company at any cost, then you're going to end up diluting your investors. So I think he didn't consider a lot of those things. And I think a lot of entrepreneurs mind, they think that if I talk about exits or buyout, it'll be really good for the investor. For us, it's a red flag if that's all you talk about. It needs to be how you're going to grow the business. And if I give you the money, how is it concretely going to be used? Like I need to know the plan. You can't just say, yeah, we need money to grow. Everybody wants money to grow. But like, how are you actually going to use this investment? And there's got to be a path that is clearly visible on how you're going to apply that money and what that money potentially has the potential of generating you. And then how am I going to see the return down the line? Right? Whether it be in the form of dividends, royalty percentage, because that was one of the smaller businesses. I don't think it ever had the potential to be acquired. So for him, he kind of missed the point and he didn't convey to my emotions. And I think that's why I chose not to invest in it.
and shows like Shark Tank and Dragon's Den in the UK
Mm.
and that thing. Are those? I mean, I know they're dramatized for TV, and that's the long pregnant pause and and all that sort of stuff. But are they an accurate representation of the process that around pitch and sort of the lines of questioning that someone might go through if they were looking for an angel investment?
Yeah, I think yes and no. So I mean, yes, it is dramatized for television, and I think a lot of that is a lot of the more questions that they might ask the due diligence they do after the episode's done airing. So you can look up the statistic too. Like majority of the people who on TV they say, okay, you got the deal, but they don't actually end up getting the deal after that. Because then after that, they go through the due diligence phase, right? And then they realize that maybe they made up stuff for the pitch or they overhyped it and the reality is not the same. And then they do the actual negotiations after the episode. And majority of the people who even got the deal on TV don't actually end up getting the deal. I had several of my friends on Shark Tank that got the deal, but then due diligence phase, they didn't get the deal. So for TV, they call it because they got to get a deal. But I think the questions really come down to the due diligence. Because, but in a person, they're not coming in presenting to me like in Shark Tank. They're not presenting it like a pitch presentation. We're just sitting down and having a conversation. Maybe they open up their laptop, show me their Stripe accounts, and we're kind of going through that one-on-one, just sitting together. And in reality, that's how I've done most of them. And some of them I haven't even met. Like I've invested just on like startengine.com, Republic, and WeFunder, and all those online funding websites. But those are good because they do a lot of the work for you, the due diligence. They make sure that you have all the statements that you need, the financials you need, the risk disclosures you need. And I think a lot of those have made angel investing now super easy for anybody to get involved with. You can invest as little as $50 or $100 in some of these companies and buy, fractional tokens. So a lot of that's been democratized, but that comes with pros and cons too. because now companies have so much access to capital online that they don't even go public anymore. They just stay private for so long. And as an investor, that's kind of a problem because that's how we make our money. 90% of the deals are not going to give you royalties or dividends. So unless they have an exit in mind or the ability to go,
Of course, that can always change later on, just because I'm going to exit today and I'm going to raise $100,000 or $1 million or $10 million, tomorrow.
Yeah. Yeah, there's companies that have done that to me, right? I've invested in them and they're doing really well. The product's going well, company's doing great, but they just keep raising money, money, money. That eventually what happens is your original investments get diluted. So I think that's also like another red flag.
Yeah. Yeah. Talk to me about system, right? So I know we talked about systems for trading, and I won't get into that one because I know that's part of your proprietary knowledge. But let's talk about a system in your coaching business. How do you approach client acquisition, conversion, and retention in that space?
Yeah, I mean, first of all, systems are huge. Like I learned this the hard way because when I started, like I wasn't really an entrepreneur or anything like that, so I didn't have the knowledge in the beginning of systems, and that taught me a very hard lesson because we grew the business, and it was a very small business, the coaching business when we started. It was like 100,000 a year, 200,000 a year, very regular business. And one day, out of nowhere, one of our YouTube videos went viral, and we just went to like 7, 8 figures in like no time. And that was like a tough lesson because our systems were never built to handle any of that. We had no systems actually. So when somebody would question me on, what's your MRR, what's your this, what's your that, I had like, I don't know. Is
Like, what's an MRR?
yeah, that's a Stripe account. There's, what's your LTV? I'm like, I have no idea because we just had like regular checkout buttons with no systems in the back end. And that taught us a very hard lesson that we had to revamp a lot of the things over the last even 4 years. We've been revamping and it's still been a process. But now the biggest systems I keep is as opposed to more my managing my team on how I can delegate tasks to them so that they can give me what I need. So we do it even now. It's not perfectly made, but we do it on Discord. So on Discord, like my team would post, the person who handles my Facebook ads, he'd post, let's say, every Friday, here's what the accounts did, click ratio, all that stuff. We have the metrics. And then my customer service staff, she'd post the same day on a Friday, how many conversations she had, any feedback, any complaints, how many people she reached out to. And then I have the same systems for a person who does my marketing, how many phone calls he took, how many times he made the offer during the phone call. Right? If he only made the offer once, why only once? If you're having a 30-minute phone call, you should have at least offered a couple times. So we try to measure a lot of those things now so that I can go into my Discord channel and everybody has their reports every week. And at glance, I could sort of manage my system and I could get a hang of, okay, where the ball is being dropped, right? If you had 30 conversations, okay, then how many follow-ups did you have, right? Like I can look at that data and that makes me, make better decisions as opposed to systems. But yeah, in terms of your other question about how we do the automations, right now we're using Go High Level, which has made, the job a little bit easier, and Stripe. So in that, the process basically is, when customer signs up, making sure they get all their access information in the next email. And the other onboarding specialist would also reach out to them, scheduling a phone call so we can guide them accordingly.
So you've built automations around that onboarding process that once someone signs up through whatever Stripe sign up form they've got, that there's a sequence of stuff which includes both email and manual tasks for your onboarding specialist.
Correct. Yes. So then they sent out all their login info. They get sent out, a schedule link to book the onboarding call. They get access to anything that they purchased, and then they get added into their automation sequence of, okay, this person has already signed up for this, so they don't get offers about the same thing again and again. So we set up those things, and we're still tweaking it every day. It's not perfect, but I think that's the thing about business. I think a lot of people try to get it really, really perfect, they never actually launch. And I think for us, it was like, okay, let's launch. Things are going to break. As they break, we'll start patching things up. And I guess that's just, a scrappy way of, getting to the end goal.
Yeah. Ironically, I've just been literally writing about that in my upcoming book. It literally says, build it once, improve it often. It's a whole chapter on just doing that and saying,
Yeah.
your funnel is telling you something if you know how to listen. But that's so true. If we build the basic system, right, then we get to continually improve it, right? And don't just say, oh, it's done, I don't need to do anything else. So your onboarding system, which you've just described, when someone signs up and they get a welcome email, they get their logins automatically delivered. It's giving you massive scalability. And it doesn't matter whether it's in Go High Level or Entreport or Salesforce or HubSpot or I don't really care what the system is that you're doing. You could probably deliver it in MailChimp if you want to, or that you've got a checklist that sits on your desk that says, day one, need to send this, day two, need to send that, day three, need to send this. It starts to give customers a more consistent experience, which means they're more likely to tell someone that they had a good time. And that feeds the front of your funnel again.
Yeah, absolutely. And I think it's very important for retention, especially if you have like a membership product, which is a monthly subscription, that if the only time you reach out to them is when they sign up, we're going to lose them eventually, right? They might not renew, or they might love your product, but they are maybe overwhelmed, or they're not sure. It's just too fast for me. And then they're going to cancel anyway. So that's something we did even recently, is we even had all the onboarding sequences. We had all of that, but the retention levels were really low. Like people would take the trial, but then they might, let's say, not continue for the renewal. So then we tweaked it a little bit more. So now the onboarding email comes with a video where I walk them through, the website, how to use it. Here, you log in, here's how you access the trades, here's how to actually follow it. If you have any questions, how you reach out. And that increased our retention, right, by a good amount. Like I think 25% increase in our retention just by adding that onboarding video and the same video in the thank you page. So now they know how to use everything, so they don't leave because of some of them questions were answered or they couldn't figure out where something is located. So yeah, I think onboarding videos are really helpful, but you screen share and actually show them as you walk them through everything. I think that was really good for us, increased it by 25%.
Yeah, that's amazing. I mean, you actually see the results of that sort of thing as well. I know, you talked about, you mentioned a term before. If you're not familiar with the term LTV, it means long-term value or lifetime value of a client. It actually reminds me of that awesome quote from Mad Men, which I looked up earlier, and, episode 10 where Don Draper's character is chatting to Pete, so John Harmon saying, I've never lost, and Pete says, I've never lost an account before. What do I do? And Don, Don turns to it and says, basically, the day you win client is the day you start to lose them.
Yeah.
And that's so true in a business, in a coaching business where you've got value that you deliver over time. The longer that you can keep a client, the less, you're going to spend acquiring a new one. Because that's the expensive part. So just doing things like building a system around onboarding and retention and making sure someone continues to see value in what it is you do. I've got a personal quote that I like to throw in here. It says, when your client runs out of future, they'll leave. All right. So if we think about that, if you stop communicating with them, that they'll go, there's no future here. I'm done. I've learned everything I'm going to learn. And away they go. And that might be built into your system. You might say, I'm going to take you from this point to this point, and then I'm going to pass you on to someone else or refer you to someone else. Or you can say, well, here's my next program. And then here's the next program, and here's the next program to increase that lifetime value.
Yeah, absolutely. And I think as you just said, like, sprinkling in a lot of value in that. I think one of the mistakes people make that I've noticed in some of the other companies and other businesses is that when they are trying to communicate or keep in touch with their email list is always making offers, which is the wrong thing to do, right? They're always making an offer of come attend my free class, come attend my new course and launching this new thing. And when you do that over time, you're going to run through your list very quickly. You're going to fatigue them and they're not going to want to open your emails. So our emails are very intentional. It's mostly stories. It's mostly giving them something of value without asking anything in return. So, we 3 to 5 of them before we ever make any other offer or to sign up for anything. But what we can do, I think a lot of people miss, is in the bottom of the email, once you've given them a value or story or a blog post or something, at the end, you could say, here's the 3 ways to work with me. Should that be interest you? So now we're still making an offer, but it's a very subtle offer. So that doesn't cause list fatigue. I think that's really important to look at as well.
Yeah, absolutely. We'll finish the show with a little bit of a quick fire, just to sort of round things out. Let's go with this. I know you've got a team. How big is your team?
It's 6 people.
What do you think are the keys to building a great team?
I think keys to build a great team is you need at least one of them to be like an A player, right? So one of them needs to be an A player because otherwise you're going to end up micromanaging and having to do everything. And I think that it's supposed to be a rapid fire, but it was like I think A player is really important. But then the other thing is they need to be bought into the vision. So for us, it's not about how many courses we're going to sell or how many coaching clients we're going to get. It's all about how many lives you've changed. So that's the kind of way we have the conversations.
How long does it take for you to see what you define as success in your coaching business?
How long does it take?
How long did you want to take you?
How long did it take me to see
Yeah.
success in the coaching business?
Yeah.
I would say it took at least 5 years. Yeah, 5 years. I think from 2015 to 2019 was super slow. Not really a lot of attention. And 2019, it just kind of took off.
Was that the YouTube video?
Yeah, the YouTube video started it literally all. Before that, it was just like a hobby for most of us.
Yeah. What do you think as a unique skill that you possess that's helped you be successful?
I think my mindset. I'm very mentally tough, mentally resilient, and anytime anything goes wrong, I don't sweat about it. I just think about, okay, what are we going to do about it? I think just that question has kept me out of trouble and helped me see the future. Not what's going wrong. What are we going to do about it? How are we going to fix it? Just asking the how questions.
What do your parents think you do?
My parents think I just gamble in the stock market every day. Really, it's just that's what they think. Conservative Indian parents, they never invested in the stock in their entire life. So according to them, I'm just somehow making it happen.
Love that. What do you wish you were able to tell your 18-year-old self?
Yeah, that's a great question. I would tell my 18-year-old self that to save more money than you do, right? Like don't spend it all in one place, and start investing very early. Because even though I was trading every day in and out, but I used to still trade every day. If I just invested a lot in the stock market back then, I'd have heck a lot more money. So I think control your spending habits.
Yeah, you would want a couple of Bitcoin.
That's true. You know what? I have a very bad story about that. We used to use Skype. Somebody told me at like $10 a Bitcoin. And I literally, my message reply back to him on Skype was like in capital letters, LOL, like 100 times. And then he told me again at $100 a Bitcoin. I was like, come on, man. Like, hello. I just sent him those responses. He still sends it back to me every time Bitcoin goes up by 20,000. He sent me the screenshot. Remember this from 2010 or whatever?
Have you ever thought about giving up?
Yes. Yeah. Be honest, like not recently, but I would say in my first 2 years of trading, I pretty much thought about it every weekend. Yeah.
Yeah. If you were to have coffee with any person to be able to pick their brains, living or dead, who would they be and why?
I would love to have coffee with Werner Erhard. He's one of my favorite person in personal development, great books he's written. And then I would have coffee with him, and I would have coffee with him because I think a lot of his teachings has transformed the way I think and my life, and a lot of the work that I do and how I coach people is through a lot of his frameworks. Yeah, I would love to have coffee with him.
Who would you say is your most important professional mentor?
Most important professional mentor. I would say my ex business partner. Yeah, because he taught me how to trade, and we started the coaching business together. I just bought him out this year in January, but yeah, I think I learned a lot of the business under him.
Awesome. All right. Lastly, what's one initiative on your whiteboard that wasn't there 30 days ago?
Ooh, I want to give a TED talk. Yeah, I want to give a TEDx talk. That's been something new on my list recently.
Yeah, love it. Love it. We'll finish up there. Anmol, thanks so much for sharing your journey in business and all the things that you're doing. Guys, if you want to sort of connect up with Anmol at Live Traders, you can go to anmol.net. We'll put all the links for that in the show notes. You can find him on LinkedIn, X, and Instagram as well. We'll put links for that below. But mate, really appreciate you joining us on the show today and sharing your insights.
No, thanks for having me. It was great chatting with you.
Guys, if you enjoyed today's show, please like, share, put it on YouTube and make it go viral. That'll be awesome. We'll catch you on another episode real soon. Take care.